is the first day of October and the market's kicking off the fourth quarter. We've got Matt, we've got Noah, we've got Cody and myself here, Coach T from TackleTrading.com. It's our halftime report. Let's start with Matt. Matt, there's a lot going on out there, actually. Individual corporate news, some stuff going on in oil, but some manufacturing data that's got the market real concerned. Me as well. First off, how are you doing this morning, brother?
I'm doing better than the U.S. manufacturing. I'm doing better than that. I'm doing better than the brokers, I'd say.
Doing better than GE?
I'm doing better than General Electric today.
Yeah.
Doing better than the dollar.
I'm doing better than most things today.
Yeah.
Most things today.
I like it. I like it. You know, manufacturing numbers, whenever the number is at 50%, they call that balanced, and above 50 is expansion, below 50 is contraction. Matt, we've been seeing this trend in the wrong direction now for some time. We saw some economic indicators about recession in Europe for some time, but now this is bleeding into the U.S. Even more so. Is the word recession reasonable here, to start talking about?
It's a big word. There's no doubt about it. And it's a word that makes people go a little crazy, T. There's no doubt about that either. Mm-hmm. But it's just a word. That's all it is. It's just a word. It doesn't mean the U.S. stops producing goods. It doesn't mean consumers stop buying goods. It doesn't mean that the end of the world is happening. Recessions are normal in economics. They happen. We've had 13 recessions since the 1920s. We've had over 50 recessions in U.S. history. They're absolutely normal part of doing business. The question I have is, why do people freak out because of the big R word or the big D word, depression? Why do you guys think people freak out over that?
I think they correlate it with job loss, unemployment, falling equity prices, asset prices. They remember some pain. It's kind of like the old poker players. They always talk about the bad beats they had in the market, right? As a consumer, somebody who's working in the labor market, right? You got a job for somebody. You remember 2008 or 2000 or the pain that you went through when those recessions did hit. So I think it's probably just an emotional reaction to history.
So doesn't it mean they fear it because of how they personally participate in it?
Yeah.
Right.
Yeah.
So recession. So when you're looking at the ESBI quadrant, E and S's are really, really scared of recessions, and the B and the I quadrant just prepare for it. Yeah. And so it's how we have participated in it. And most people get scared of the big R and the big D because they think back to 2008 and they think, oh, my 401k went down to a 201k, and they think back to 2000, 2001 when, their 401k went down to another 201k, and they don't want to repeat that. Or they remember, benefits, corporate benefits at their company being cut, or matches getting slashed, or they got fired, or had friends that got laid off, or family members that got laid off, or whatever the case is. It sparks a degree of fear. But the reality is, it's just a normal part of doing business from an economic perspective. And we're going to go through a recession. People need to understand that. But as a trader, as an investor who knows how to buy protected put options to protect long-term investments and knows how to trade to the downside, these are not something people should fear. And I'm not saying we're staring at a recession this month, but the economic indicators are there, Tim. Australia just lowered their interest rate yet again, 2.75%. Every country around the world, every central bank around the world is in the process of easing their monetary policy. And we've seen the economic data coming out of the Eurozone. We've seen the economic data coming out of the Asian zone, and particular in Japan and in China. And what we've been saying, Tim, for months and months and months, is this economic data, it's going to bleed into the U.S. And that's what you saw here today in the U.S. The ISM manufacturing report came in at 47.8 today. That is not the first time we've had a negative reading on the ISM report. We had it in 16. We had it back in 13 as well. But this is the worst reading on the ISM since back in 2009. And so obviously it's going to trigger, there's that fancy word people like to use, but it's going to trigger a response in the market. And when the first time we see that, you saw the quick response in the market. And here's what the response was. You saw the market coming in on the overnight action. Okay. That's the market coming in on the overnight action, kind of comes into that intraday resistance zone. There's the cash open right here. Let me come in here, right here at 8 o'clock in the morning. That's when my time, 10 o'clock on the Eastern Standard, That's when that ISM manufacturing report came in. And what happened? The market just got beat back down. And where did it come into? It came into that same level of support that we've been talking about for weeks now, and that's that 2950 level. So it's going to be an interesting next few hours in the market. This certainly could break that support, and the pain of the buyers could get worse here.
Old resistance right there on the chart, kind of hanging out around that 2900, 2925, 2950. There's a huge zone here. You're sitting on a 200 period moving average, trying to find some support. This ISM number was not expected, obviously. Like you said, I mean, that's an amazing thing to say, Matt. Since 2009, this is the worst reading on the ISM report.
Yeah, and we did get a negative reading in August as well, T. In August we had a negative reading of 49.1. So this is an expansion of that negative reading, and a lot of people, if you remember last month, they were just putting that as a one-off type situation. It's just one time. Now we have 2 consecutive months where we have a negative reading, with one of them being the worst reading since 2009. You can't just offset that by saying this is a one-off. Not when we've seen the manufacturing reports coming out of Germany, France, the Eurozone, and China all read negative for months and months now. So it's going to be interesting from an economic perspective. But again, recessions don't happen in a day. They just don't. When you're talking about economics, you're talking about quarters to month to years type scenarios. Markets, even in 09, guys, the market went up sometimes in months. So it's not like it just goes down overnight. We think back to that and we're like, oh, that was just one moment in time. That recession really took about 18 months. The recession in 2000, 2002 took about 24 months for it to really find a bottom. So it's going to be fascinating the rest of the day today.
Let's bring the master trader himself in here, Noah Davidson, and kind of talk a little bit about this chart here, Noah, because all the economics Matt and I just, referenced to and kind of broke that down a little bit with the manufacturing report. But what are you seeing in the chart here? Because you got old resistance, you got a 200 period moving average, you've got a compression pattern. And Matty, if you pull that thing back far enough, you have a rising wedge on the big picture. Noah, break that chart information down for us.
Well, a couple things you didn't mention there. You got the double top, of course. And there's a big support zone in there at that 2950 zone, 2940 between there. That if you look back, there's some old resistance pivots. There are some intraday resistance pivots there, and this is just a big, I think, technical support zone. If it violates, I think it starts to clear people's thresholds and stops, and so part of it will be a mechanical sell-off, not even an emotional or a knee-jerk reaction to the manufacturing. It's just, people have stop losses in place. And if it starts to trigger those, that becomes a mechanical selling scenario. And you might hit your algos, might start selling into that. So this is a pretty important price threshold. And again, just got to keep an eye on it. A close below that zone would, I think, be an indication that we'd probably see some continued selling. But I'm honestly wondering if we got so many Fed chair members speaking this week. How long is it going to take them to allude to a rate cut?
How dovish are they going to go? That is the question, though, because how dovish are they going to go? You have over 10 Fed speeches literally this week.
It's going to be like after a wedding, and they're just going to release the doves. That's what it's going to be. There's just going to be a plethora of doves flying around.
They did have a split in the vote last time, guys. I mean, I'm not, there was some people dissenting and saying, hey, we shouldn't cut. I know they did win the vote for the rate cut and whatnot. There's a lot of implications there, but I don't think everybody
before the ISM manufacturing report came in at the worst reading in 10 years.
As much as I want to, like, my hawkish self wants every single one of them to be hawkish and be smart and be like, and say things that Matt said. Recessions happen, guys. We just have to know how to deal with it and prepare. They're not going to say that.
Rip the Band-Aid off, get it over with. Let's start growing again. But
they're not going to do that. They're going to go through and be like, we're going to do anything it takes. We're going to make sure we're here to protect the market. We're going to look out. We're going to be cautious. It's like, oh my God, the same language.
And let's just make sure we understand one thing. Just because we go through a recession does not mean the market has to go down 50, 60%.
Correct. No, it doesn't.
That's not. In fact, the average drop during a recession since like 1913, guys, is only 33%. I mean, we went down 20% last December, and last I checked, we didn't die.
Hey, you know what, Matt? This would be a good time to maybe pitch the bear market survival guide. Just throwing that out there. If you get nervous about little manufacturing data and the bear inside of you is coming out. We got a solution to that.
There you go. You're like Elizabeth Warren today, buddy. You got a plan for everything, don't you?
Did you see the Zuck news about Elizabeth Warren and some of the leaked audio?
I heard Zuck's ready for war.
He is. Yeah. He's like, no, he said you got to go down to and fight it out, right? Or something like that.
Did he unfriend Elizabeth Warren on Facebook?
I asked Cody in the pre-production show, I said, Cody, could you imagine Zuck giving a war speech?
And my response was, I'm more likely to see him have an army of iRobots.
Like he's giving the speech in iRobots to the robots.
Yeah, he's just gonna open like the truck start rolling in with Facebook on the side, and everybody's like, "What's going on?" And iRobots start blocking out.
If Zuck stood up in a corporate meeting and started giving a motivational speech, I'd be like, "Can you hire somebody else to give this speech for you?"
He's not exactly the most motivating.
Though, you don't take on the largest social media broadcasting company in the world when you're trying to run for political office.
So Elizabeth Warren does not care what you think.
Before you move completely into Facebook here, I do want to talk.
Have to care what I think, but I can tell her if she's going to take on someone.
I think she should. I think more politicians should take on Facebook. More politicians should take them on.
They're going to continue to try to break up these big tech companies. There's no doubt about it. They're going to go after them, guys. It's not going to be going away even for Facebook or Google or any of them. And some of the concerns are legitimate, quite frankly. So we can punt on that for 1 second. I want to get your take on one thing, though. This manufacturing data, the market, everything, could it just be caution heading into the fourth quarter based on what we saw last year? You know, I mean, could this be that manufacturing stuff is a survey of purchase managers by companies? It's a reflection that they're cautious right now, you know?
Yeah, but I mean, we all know October's data. There's a 25% chance of decreased prices in October. It's the worst. It's the worst month in the market based on seasonality. Would you agree with that, Noah? You're the seasonality expert.
Oh yeah, it weights those averages down. I mean, it's not always negative, but there's always a potential. I think for sector rotation at a minimum, like where companies start pulling money out of one sector and putting it into another, and so you do see sell-offs this time of year, even though they might be short-lived. But yeah, no, absolutely, it is statistically when the markets have the roughest time.
Yeah, and again, that's only 25% of the time. I think the average drop in price per month is around 19% of the time. So it is a statistical edge in October that we do see decreased price action. So now, Tim, I don't think it's a one-off situation. I mean, I understand the argument there, but to me, I think this has much more to do with the global economic condition. I think this has much more to do with the trade policy than it does just one random event that happened last October.
You know, large cap tech is kind of split here today. Facebook down 1%, Google down 1%, but Apple is up. That's a head and shoulders on the week.
And that's why I stayed here.
Yeah,
right?
that is
I didn't want to bury that
shot.
lead. Yeah. That is a left shoulder. That is a head with slowing momentum. And that is a right shoulder. And that is threatening that, what do you call that, Noah?
That neckline.
That neckline. Let's draw that neckline. That's threatening that neckline right there. And you're just starting to see the continuation. It could get ugly for Facebook here.
Especially if it violates that moving average there's a 200 period moving average on the daily chart. So it's right there.
Yeah.
Yep. I'm not seeing much difference between the Dow, the S&P, the NASDAQ, and the Russell, but the Russell probably is showing me the longer term trend, much, much more neutral. Matt, you led our scouting report meeting last Friday, and I actually had it up in the ballroom there when I was down in San Antonio for a few minutes. And you guys had a good discussion and ended up putting the S&P at the 45-yard line.
Yeah, we did.
I think we're down right neutral right now. At this point, the cowards ranking probably.
You got to go cowards. You got to go cowards ranking. And so if we were to see the ISM manufacturing report last Friday, obviously we probably would have been at maybe even have been negative 45, but probably right there at the cowards ranking at 50. I mean, you're threatening that support level on the NASDAQ. You're threatening support on the Dow Jones, and you're threatening support on the S&P 500. It doesn't mean it's broken. It certainly can hold. I mean, support's there for a reason. So I wouldn't just aggressively capitulate to anything here, but let's see how support is handled here at 7,700 on the NASDAQ and 2,950 on the S&P. And if you come back to the intraday analysis here on the S&P, you did have that quick initial surge to the downside, but once again it comes into that zone of support, and you're starting to see that zone of support really kind of respond. Now this is just a bearish retracement at this point, but let's see how that support level really handles the rest of the day.
Yeah, we're at support. We're only down 1%. I'm not going to panic or freak out. Obviously, you should never do that. If you're team tackle, you know that you have to have a plan, position
Assassins don't
sizing
panic.
money. No, you don't panic.
Assassins don't panic.
Breathe through your nose, out through your mouth, trade the market, what you see in front of you. I will tell you, probably one of the most notable charts, in my opinion, today is the dollar. The dollar tried to break a little bit here. And when I saw the headline this morning from Australia that they're going to cut again, they did cut again. The dollar showed initial upward movement, Matt, but a currency system is a reflection of the overall economic health. And when that ISM number came in, boom, the dollar just took it right on the chin. That's a significant move because of the implication it has on so many products. Break this one down for us, if you will.
Well, it wasn't just, the Australians lowering the interest rates, although that certainly had a role in it. You had some negative data coming out of the Eurozone, and Boris Johnson's plan for the Brexit is going to get blown up in 2 weeks. And so that's arriving. That's dead on arrival.
Yeah, I was just about to say that, DOA.
Yeah, it's dead on arrival. So that was really kind of what led. So you had kind of that double, triple whammy type situations, negative economic data, Boris Johnson, Boris Johnson's plan for Brexit, dead on arrival, and then Australia cutting interest rates. But then you had the ISM manufacturing report come out. And again, right here, correlated with what the market did right here at 8 o'clock, you just saw that just drive the dollar down, and probably a good thing for the dollar. The dollar certainly was a little bit overextended at the top end of its trading range. And if you kind of see just connecting these dots here, I'm going to connect those wicks there for no, I know you love connecting those wicks there. You have this pattern that is developing, just a nice little channel on the dollar where you're up at the top end of the range, and it just makes any currency a really tough environment when the dollar's overextended. Give us a retracement. Let's see it test that trend line of support, and I think we're going to have some pretty good opportunities on the dollar. Not today, maybe not even this week, but coming into next week.
Well, we talked about that yesterday as well. I mean, it just looks channel up to me. A pullback in the dollar is going to be good for some of the products that I like to pay attention to quite a bit, and that's gold and oil and some of those commodities, Matt. Even this one red candle kind of teaches us it doesn't always have to be inversely related. Number one, crude oil and the dollar are not always moving together day by day by day. Crude actually kind of flat to down here.
I've said a long time, Tim, I don't think they're correlated any longer. I don't believe that. I think crude moves for other reasons. Now, gold and silver, primarily gold, yes, they have some divergent behavior. But I think, crude was correlated, it was divergent against the dollar because of, oil being priced in dollars for years and years and years and years. That's been changing for 20 years now, right? Mm-hmm. And I mean, even 20 years ago, 90% of the oil market was financed in dollars?
Yeah.
I don't know what the current number is, but I do believe it's under 50.
So, I've seen that it's significantly down. I don't know if we're still under 50. I think it was for a while, but I think that's pushed back up a bit.
Yeah, and so it still plays a role, but it's just not nearly as important of a role when you're dealing with gold. Almost every purchase in gold is done with dollars. So I mean, there's going to have a correlated a divergent status.
Yeah. And that gold chart on the daily, and we talk about the difference between day trading, swing trading, and position trading, all the different metals. I know crude oil down at support. I'm kind of neutral here. If crude stays above 50, man, I'm not going to change that take, by the way.
No.
There's a lot behind the economics of crude oil. And if it did break below 50, I have concern. I don't think Saudi Arabia is going to hold it up all the way.
Oh, if you break support, 42 is in line.
Oh yeah,
but that is a major break, though, Tim. I mean,
it's been a major support all year long.
Yeah, for sure. I'm not worried about crude here, and I'm not worried about crude at 51, and I'm not worried. I might be getting a little worried at crude at 50, but I'm not going to be too aggressive here on trading this directionally until it finds some type of range. I still believe the best way to approach this is through credit spreads.
Probably. Yeah, I would agree with that. That's what I'm doing. So obviously I do agree with that. That's one thing I love about trading. It's a put your money where your mouth is kind of business. There's no doubt about that.
Your 46-foot option is still safe, bro.
For now, but you know how trading is. You always got to be aware of where it is.
It is breaking a zone of support there. So for now, but it is still safe.
Metals markets, Matt, gold making a little bit of a bounce back, but now 1,500 on an intraday perspective is going to play out as new resistance. You've got some weak signals here. If you're just a pure technician, don't care about what the product is, that's old support, new resistance on the intraday. I wouldn't short here. I wouldn't,
Tim,
obviously.
It reminds me, you don't short gold. I don't care who you are.
No.
There's better short Tesla. Go short something. Go short General Electric. Go short Tilray. Don't short gold. But I will say it does remind me of kind of what I said yesterday on McDonald's, Tim, when, you know, McDonald's was kind of doing this little bearish retracement, testing that, you know, gap out channel, the old resistance. And I said, McDonald's is at a very important moment, right? Because if it can reclaim that level, then that's, you know, the buyers are going to be coming back in from a trading perspective. But if it can't, then it just throws off the analysis for the buyers. And so when I'm looking at gold on the short-term day chart, which I do agree with Mark that you should mostly analyze gold on the weekly chart. But if I am looking at this from a short-term perspective on the day chart, yeah, you have a, you know, with the dollar coming down today, you have gold showing a little bit of strength coming back into that, the old support right there around, you know, let's give it 1490 by 1500. It's coming into that old support level, and it's just going to test it. Mm-hmm. And as you can see right here, it's getting into that old support, and it's just kind of fading, just kind of testing, and it wants to see if it wants to reclaim 1500.
Yeah, it's
there's
making
no
nice
short-term trade here, though.
Not one way or the other.
Not one way or the other. Yeah. If you're looking at buying gold, you're still looking at buying it above the breakout channel, or you're looking at buying dips here. And I'll tell you right now, if I can get a dip down into this level at 1440 or 1400, I think that's a really good position type entry point.
Yeah,
it's like, and I saw Jim Rickards on Twitter today. He was talking about the people that are complaining that gold's coming down a couple weeks in a row. He's like, that just gives us, what are you guys doing? That just gives us a better opportunity to buy at a cheaper price.
Yeah, investors and position traders who look at economics and buy gold to hedge against currency risk are not worried about short-term daily candlesticks. No, I don't think Jim Rickards is concerned about the technical breakdown.
You obviously always want to make money as a trader. I'm not saying that. But you don't buy gold solely to make money. You buy gold as a protection, as a hedge, as an offset, and you want to make money, but you don't need it. It has intrinsic value.
Yeah, for sure. Bitcoin getting a little bit of a bounce. We haven't looked at this one every day. It's been in a downtrend now for a couple of months now. Broke down below 10K.
What was that game we played? What was that game we played last week? The divorce game?
Yeah, like relationship advice. We don't have a name for it yet. We need, maybe Team Tackle can come up with a name.
You've had a very volatile relationship with Bitcoin for years now. You've stuck through it, through all the muck. You have through the great times going from 3,000 to 20,000, through the horrible times going from 20K down to 3K, the euphoria of the new honeymoon going up to 13K. And now obviously you came off the honeymoon and it's like, oh, what did I do? Are you sticking here, bro?
Listen, I mean, Bitcoin's like my little puppy. I raised this thing, okay? When it was really little, I get it, but it was a time. Well, I have a relationship with my dogs. I don't know about you. I know that you don't actually, but that's a different conversation. I raised Bitcoin. I'm gonna stay with it. The volatility does not bother me.
You're changing the analysis, so we're now doing like family relationship advice here.
How do you know when your relationship's been abusive though?
That's a good point. And who's been abusing
I know
who
it's
here?
Beat him up a little bit, so I'm just saying.
The position I have in Bitcoin personally is not as big as it's going to cause me any emotion. So
it's a small position,
and it's more of an investment for me. Yeah. What I hold in Bitcoin is truly a hold in the longer term.
I said last week when you guys were trying to coax me to divorce US Steel, I said no. We had some rocky times. But you know what I see here, guys?
Inverted head and shoulder, double bottom.
Little double bottom there, guys. See that nice little double bottom, obviously slowing momentum. And US Steel just announced today they're purchasing Arkansas. I can't remember what the name of the company is. Some Arkansas steel company for $700 million. They have a 49% stake in it. They got a contract that allows them to purchase the other 51% in the next 4 years. And US Steel up a rock solid 5%, obviously fading on the intraday here. But keep an eye on this US Steel. I just want to remind you guys, this little puppy can fly when it wants.
Now, I know why you moved to US Steel, because you love it.
I do.
I think that you divorced Bitcoin so long ago. Anytime we bring it up, you're like, listen, this is old stuff for me. I don't want to handle it.
I divorced Bitcoin when I landed in the airport on the honeymoon. That's when I divorced Bitcoin. I was like, no, I didn't like how you handled the flight.
It was more of an annulment, not a divorce.
Yeah, it was like we met one day and sparks flew and then you took him home to meet your mother and you're like, oh, this is a terrible person.
Yeah.
What did I do? Who is this?
US still is looking pretty good down here on the bottom.
Do you got slowing momentum here on US still on the weekly chart?
I do.
I still don't like the fundamentals.
Falling wedge. Listen, manufacturing, I don't know that really hurts or help it much, but
nobody's going to like US Steel until they get an infrastructure bill.
That's right.
And then they're going to love US Steel.
Then it's going to fly. Yeah, for sure. It's on my long-term watch list. I love the company. It's a good cash flow company, naked put, cover call, all those cash flow strategies. They work really well with this stock, man. And that double bottom is significant. Got to get a breakout now. You know,
and it's
got to get a breakout.
It's not a breakout on the daily, Tim.
Nope. That's right.
I told you, we got divorced all the way back here on a negative earnings report. But we're looking to get remarried here. And that has to be based on a breakout on the weekly chart. It can't be some daily price action.
Has it changed its ways, Matt?
It's starting to slow down. It's negative, destruction, I would say.
There you go.
All right. Significant company news today out of Schwab, Matt. I think that we've got to talk about this one. SCHW, the broker, one of the biggest brokers in the world, came out and said that we are going to cut commissions. There is
shots fired.
You do not have to pay commissions if you have a Schwab account now, which is significant. What's your reaction to this one?
This is on the backs of Interactive Brokers going with IB Lite. And they're launching IB Lite here, I believe, in October. And IB Lite is going to have full access to, news data, trading, zero trading on commissions, on, ETF stocks, options. Obviously, Robinhood kind of started this, I want to say, a few years ago. My initial reaction, the consumer privacy individual of me, and I do believe in privacy rights and whatnot. My initial reaction is, how are they going to make money? And they're going to sell our data to black holes. That was my initial reaction. But Tim, I think you had some wonderful, wonderful analysis when you and I were kind of discussing that earlier today, when you were talking about the percentage of Schwab's revenues that come from actual commissions, right?
Sure.
And
100%.
Now,
I want you to think about this, guys. I mean, when you hear the news headlines, Schwab is cutting the commission rate, and they're not going to charge commissions to traders and those short-term people. They only make 4% of the revenue from commissions, Matt.
Yeah.
In fact, most brokerage houses are big banks. I mean, they're institutions, they're financial institutions, assets under management, asset management fees, those type of things are what they're actually after and trying to attract from their clients. So this commission thing for them is only a 4% hit.
Well, if they take that 4% hit, but they can make it up by other traders coming over there to get more assets under management, I understand the decision a little bit better when we kind of looked at those numbers. But then we were talking about TD Ameritrade, Tim.
That's where it's going to hurt.
That's the thing. AMTD here. When you're looking at TD Ameritrade just got absolutely blasted on this news, and they can continue to sell here. And the fascinating thing is, and I said, Tim, I don't think TD can follow suit here. I mean, this is a growing trend now. Would you agree? You now have multiple different apps that you can purchase stocks through commission free.
Sure.
You have now big trader brokers like Interactive Brokers. Interactive Brokers is one of the most popular trader brokers out there because of their cheap commissions and speed of execution. Now they go commission free. Charles Schwab, throws a nuke here and says, oh, no, we're going to go commission free. And TD Ameritrade is just sitting there going, oh, our business model is based on commissions.
What would happen right now if I reached out to customer service and said, hey, I need you to decrease those fees one more time?
I think it'd be effective. I think everybody
should. Yeah, and I'm not kidding. I think everybody that trades at TD should be calling to ask for discounts on commissions and cite, well, if you don't, I'm going to go to a commission-free Charles Schwab, and that's why you lost billions and billions and billions of dollars in market cap. So give me a slight edge on my commission. I'll stick around. But
everybody knows this one, though.
But Tim, the problem with TD, though, all of us traders went to TD not because of the commissions, because commissions are average there. We went to TD because of the speed of execution, and we went to TD because of their technology.
The software.
The Thinkorswim software was by far the best options trading software in the world, but that was 10 years ago. A lot of these brokers like Charles Schwab, like E-Trade, like Scottrade, like even Fidelity, they've been gobbling up all these other trader broker softwares so that they now have these active softwares that traders like to do. And so now you're kind of thinning the field from a competitor perspective, I think TD Ameritrade's in some big time trouble. And you know what, TD Ameritrade, you deserve it, because Thinkorswim was amazing, and you ruined it through your shitty customer service through TD Ameritrade.
It's one thing that if you're listening to this, anybody from TD Ameritrade, Thinkorswim, stop telling people the wrong thing. I mean,
stop lying.
Go
off on Tim. Go off on
it. Drives me crazy. I've had hundreds and thousands of clients over the years call Thinkorswim and get reduced commissions. But if they call customer service directly, sometimes the person will say, no, we don't reduce your commissions unless you have like 400 trades a month or something like that.
Or they'll transfer them. They'll transfer them to a local individual in the local market so they get the commission for it. We've seen your tricks, TD Ameritrade. We know what you're up to, and you deserve this 30% decrease in price today.
Well, and 30% is an interesting number that you bring up, Matt. 30% of their profitability comes from commissions.
That's where that 30% is.
And that's where it came from.
Yep. Think about the difference between Schwab and TD Ameritrade. Schwab, 4%, TD Ameritrade, 30%. So when this is affecting them, it's obviously going to affect them a lot more directly.
Yeah.
And that's a big, big concern if you are that broker. But E-Trade's the same way, Matt. ETFC, I'm looking at all the different brokers, and it's bleeding into everything.
Every one of the brokers are down.
Big question I have is, aren't they just going to end up selling their order flow through the high frequency trading platforms and scalp the money back anyway?
That's my concern, though. No, and that's kind of where me and Tim first started the conversation. Was, that's what Robinhood does.
Yeah.
Right. And we've been highly critical over Robinhood for selling traders' data to black pools. We got to be equally as because Charles Schwab's going to do it now.
Yeah.
Interactive might not. I don't know. We'll have to see what Interactive does.
Well, I mean, the reality of that is you have to know what your broker is doing with your order flow and your transactions and your data. If they do allow other firms to trade in front of you, that does affect your fill rates, and your commissions are negligible at that point, Matt, because who cares what you pay if you're getting the bad fill, right? So that would be a concern for TD Ameritrade. Obviously down huge here today, 23%. E-Trade also down big today as well. The exchanges, CME is down. Goldman Sachs is even down. Some of these big institutions on Wall Street, the entire industry.
Yeah, but I'd take Goldman and a lot of that just kind of market related, because the market sell off. They're down kind of similar to what the market is. Those brokers, that's something spectacular right now.
Bigger picture question here. What's the future in this industry? Because commissions have been trending towards zero for 35 years, right?
Yeah.
Over time, it's lower and lower and lower and lower with better service and better fees. Don't you think Schwab is onto something here? Maybe just it is about assets under management and getting good client relationships and making sure somebody stays with you, all that kind of stuff. I don't know, Matt.
Well, it depends on the broker, obviously. TD Ameritrade is going to be different from Schwab, but this is a growing trend. And like I said, Schwab threw a nuke here.
They sure did.
They told TD and E-Trade and all of them, they said, hold my beer, watch this.
Yeah.
We see your weakness. We only make 4% on commissions. You guys make 20 to 30%. We see the weakness. This is just those dinner dates is going to be interesting over the next couple of weeks with the brokers.
Yeah. Couple of companies that are up of note here, Ulta, ULTA, and one of Noah's favorite companies. When you have daughters, Noah, I know that you got to trade the makeup companies. Breaking back out of an old gap down on earnings. Noah, when you see this break above the gap point and you've got clear air here, now this is as an aggressive reversal type of chart and trend.
I can't remember who called it. Noah or Mark called it in the lounge this week in Ulta Play.
It was a beautiful
rounding bottom, and it wasn't me, it's probably Mark, but that's a nice rounding bottom down there. And again, the nice little uptick in volume as it's breaking out. So it's got some energy. It's got some momentum. It's crossing back into the gap.
Mm-hmm. Mickelson, MKC, Matt, up 7%. One of the leaders in the S&P 500 here today. A little dividend earnings kind of combo coming up here soon. Neutral in the long term. I would not take that signal.
Good earnings report, though.
Yeah, good report. Break out of the high there on the weekly is definitely more interesting. Apple is holding the market up a little bit here, but it's only up 0.63%. NVIDIA, Booking.com, Visa, but mostly we're red across the board here, Matt. The industrial sector is probably the ugliest. Apple Computer is interesting to me. You've got that breakout. You had good positive coverage by some of their analysts raising their price targets.
Yeah, this is just market related though, T.
Yeah.
I mean, this is a cash open. Apple's doing really, really, really good. And then that's the ISM report right here.
Interesting.
So that's why we talk economics, guys. I mean, that's the reality of this situation, is why we look at economic reports, because they matter.
That's right. They drive price action, and price action is everything. So you have to pay attention to it. There's no doubt about that. All right, guys. I mean, the reality is there's a lot going on across the broad markets. I'm most not concerned, but interested at the end of the day here, Matt, on how we close. When you're down about 1.3%, and you're sitting here on the intraday, sitting on key levels of support, the close is much more significant than the open. Now,
well, that bearish retracement, ooh.
It just sold off a couple of pivots in a row. Yeah.
Yep, just sold off.
All right, Cody, set up rapid fire here. We do it on every Tuesday. We'll do the relationship show on Thursday. Therapy Thursday, I think we were calling out. Mark even came up with that alliteration, Matt.
Therapy Thursday?
Oh, yeah.
I like that.
Mark does some alliteration. You know it's going to be a good day. All right, guys. Well, this is going to get into our next segment. It is known as rapid fire. If you have any stock that you want our quick 5-10 second take on, we're going to look at the chart, just tell you what we think, whether we're going to buy it, sell it, leave it alone because we don't care. We hate the pattern. We're just going to give you a very quick rapid fire take on it and get as many as we can between now and when we close shop here in about 7-8 minutes. So get those stocks in there. First one just came in, FDX. And Tim, I'll pass it over to you.
And I'm going to fire the gun here in a minute. We're all going to race, but I got a question for Matt. Matt, is Mark the biggest softy in the coaching staff? He acts so tough. He does. He acts so brash and comes in. But then at the end of the day, it's all about sensitivity with that
Mark.
guy.
Listen, Mark has a rough exterior, no doubt. He does. But he is a teddy bear at heart.
I was going to say, Mark has a kind soul. Mark cares so much about like students and people. Like if you're in Mark's life, like he cares about you.
Like, he is.
Like literally, like the only thing he cares about in his life is team tackle and his kids. That's it.
Oh, don't forget his fantasy football team.
He does a lot, and he's very competitive.
Yeah, and he's very competitive. But no, he is. I love the filibuster here while you allowed the tickers to come in there, T.
Well, and if you're team tackle, real quick, if you're team tackle, and
I'll tell you though,
T,
I'll tell you, every one of those coaches have a soft heart.
Oh, that's why we do
every
this.
Single one of those coaches would go out of their way for this community, and that's why they're coaches of tackle trading, because it's not
I'm a cold hard assassin.
Yeah, that's right.
All right.
That's right. Cody.
All right, FedEx first. We're going
FTX.
Oldest to youngest. Noah, you're first.
FedEx, that's a big support zone. It's breaking again. Normally I look for the seasonal rally, but this is looking pretty bearish. I don't think the manufacturing numbers will help it much because that's going to affect some of them.
They also are getting hit by UPS being the first one to be approved for drone delivery.
Is that right?
Not in Amber County, Utah. They'll get shot down out of the sky.
Well,
hey, free stuff.
There's regulations around it. Like they have to fly it at certain times of the night out of the side of view. They're not.
You don't think the people of Amber County won't be watching out for that?
Yeah.
They'll have their scopes, buddy. I promise you that.
Dude, they're not wrong either. I mean, the idea of stuff flying over my property, I still do not.
I'm not comfortable with that.
I'm not either. Matt, 2 from Joel. I'm going to give them both to you. Toll and CNC next here.
Toll Brothers, nice little retracement here. It was threatening the breakout with the continuation yesterday. Little coming back down. I think this is a lot due to what the ISM report today. Probably. I'm not too concerned about it.
That was an entry, by the way. That was an option report candidate a week ago. So that pivot pullback trigger, we played that.
And that's also first target here.
T1. Right, I would probably T1. Roll up. Yep, I would do that.
I would have just stop lossed him on this one. It's not a retrigger, but I would have just stop loss. And you got to find an intraday level that you're comfortable here. Maybe it's 40, maybe it's whatever happens at the end of today. But yeah, it's still good.
CNC, you stay with this one, Maddie.
CNC. Let's go ahead and switch this out a little bit. Okay, CNC here, you're looking at a breakdown out of a low base following a previous breakdown. This is a momentum play here, certainly shortable, but you would have to trade it from a momentum perspective with a momentum stop loss.
God, healthcare stocks like that stock have been just destroyed in many regards. The healthcare sector still is one I have very, very real concern about. Good candidate there, Joel. Intel next here. I'll take this one from Abel. Chip makers, semiconductors. We got a little bit of
details. Come on, TD.
Oh, TD Ameritrade. Today is not the day.
I think they heard what I said.
Today.
They heard you online and they're like, all right,
I think they heard what I said.
TD Ameritrade, you got to step your game up. There's no doubt about it.
Get it together, TD. Come on.
Intel, next one here, Matt. Chip makers, semiconductor stocks. Obviously, they're going to lead the market when they want to. This one's neutral. It's got to make a breakout. If it did break out, you've got dividend payment here. You got a $200 billion company. I still love the company. Don't get me wrong. It is a tackle 25 candidate for a reason. Good dividend payer, good earnings, just neutral in the short term.
I'll tell you, keep an eye on that weekly, though. Right there at 53.30.
Yeah.
That could be saucy.
I could get excited about Intel.
Could be saucy.
Nike, Cody, you get this one. Cody, you wear Nikes, right?
I'm sorry, what's that?
Do you wear Nikes, young man?
I do have.
You have heard of these things called Nikes, like shoes and the apparel.
Oh, is that what those are?
Yeah.
Hey, what are you talking about? This company is named after a Greek semi-god, Nike, who was the god of track and field. So come on.
Did you have to? Did you have to?
All right. Well, Nike had a good earnings that came out. It did pop, move to the upside. There's not really an entry point here. I'd actually be looking for this thing to fill back down to that 90 point. If you get a fill back to 90 doji candle from there, that's an entry. Right now, can't touch Nike.
I do like the company, though. Still like it. CVS next. Healthcare plan, healthcare distribution. Noah, here, CVS.
I see a little double top kiss goodbye action off of that moving average as well. Bearish engulfing candlestick today. Probably could put in a good drop to 60.
I know it's rapid fire, but do you guys ever see a reversal and just still don't touch it? Don't trust it, anything? Because this company, after I saw the earnings report in the spring, Matt, I've kind of had this on a do not touch list. And there are times where technicals trump everything else, and I just will trade what I see. But there are times where I have these opinions. I don't know if it's a good thing or a bad thing. I think the company's a bad company at this point. So I don't know.
Well, I see the signal that Noah's talking about. Do you take the trade? I probably don't, because I think there's better shorting opportunities out there, but it's definitely the analysis.
Short below support, long above resistance. I know you could justify a trigger one way or the other. I just still don't trust that trend.
I know. I think we spent way too much time looking.
You don't like CVS is what you're hearing. AMAT, Avgo, and AbbVie. Matt, I'm going to give you three here.
AMAT here, little bit of a bullish retracement, but I just don't like the rounding here. I'd like a little bit more something along those lines. I got a neutral rating on this, which basically means on Applied Materials, which is another tackle 25 stock. Real good appreciation this year. Think about it, guys. Where a lot in this space has been really kind of beat up this year, Applied Materials has been really, really good and really consistent. Great covered call stock. If you're looking at a covered call, yeah, that's one thing. If you're looking at a directional trade, you got to wait for this to break out.
Yep. Avgo, Broadcom, one of my favorite companies from a long-term perspective, and neutral in the short-term, near-term. Maddie, anything to add?
No.
ABBV, healthcare plans were under pressure earlier. I haven't seen this chart today. Actually, red candle.
Yeah, overextended, needs to come down, needs to retrace. Keep an eye on the 20, keep an eye on the 90, keep an eye on $70.
Anytime we talk Roku, I got to bring Cody in here. Roku next here, young man. Now, obviously, the kind of product that your generation is loving. What you seeing here, kid?
Man, I'm seeing as soon as this is the media starts talking about a company when it starts doing well, people flood into it without ever looking at the chart, and then after all the hype dies down, it finally settles back down into a normal place. Because I was talking about Roku being a good company, back in February, when I was trying to explain to you guys what it even was. And then it hit the news about 2 or 3 months ago, spiked up. We got a bubble pop from that. Now I just want to see it actually build some level of support. It could happen right there at that $100 mark. But I don't see a trade one way or the other on this. If it were to break down below 100, yeah, you could short it. It might hold 100 because that might be a more stable price for this company.
If you were looking to add this to your portfolio, though, because you believe in the growth prospects to, take in some of that.
Of Roku at $100?
Yeah, I mean,
yes.
The reason we had the gap up here is because they were expected to come in at 16 cents on a negative. They came in at 8. A lot of people project them to be actually profitable next year for the first time. So
I would wait.
I would too. I'm just saying, I never thought about that as this was chasing up here. But now when I'm seeing that kind of round down at that significant whole number at 100, yeah, I don't know.
For sure.
I mean, talked into a little bit.
Psychological level, there's no doubt about it, Matt. But the volume pressure in September to me would be enough of a red flag where I'd give it a little bit of time. I am interested.
Well, yeah, you're never going to make that decision on the daily. But if you look at this on a weekly, guys, you're slowing down at some major support level. It's just a stock I think we should keep our eye on.
Foot on the gas pedal here.
Matt talk about weekly candlesticks. I feel like there's
Mark,
a conversion going on.
I love weekly candlesticks. I've done more of it. You've impacted me. I've looked
weekly
at more
candlesticks
weekly
are amazing.
Yeah, I've looked at more weekly candles in the past month than I have in the past 10 months.
I like it. I like it a lot. Mark, hold your thought for 1 minute. We're going to do a quick 1 minute, Matt, get through a bunch of these. I'm going to have you go for a minute, and I'm just going to throw them at you. You're going to hit them out of the park. Big is next. BIG.
Big. Perhaps a little bit of a reversal happening in big lots here. I'm not one to get involved in the big box retail. I just, that's not a space I want to be an investor in. But in terms of just the pure technical situation, you do have a rising support level and you got a horizontal resistance level right here at a significant number at $25. A breakout at 25 could be a trigger.
Does anybody in Team Tackle shop at big lots? I haven't been in a big lots in 20 years. 20 years, yeah. Amazon, Colpert, and CTSA. So
Amazon bearish downtrend, Tim. It did break support there at 1750. You're hovering. You're kind of kissing off that level at 1750 today. Nothing to trade here on the downside. I'm not one to aggressively try to short Amazon, but you do have some weakness here at that 1750 mark. And a breakdown of 1715 coming back down to the weekly chart here, Mark. You do have a support level right there at about 1700. After that, you're looking all the way down here at about 1580, Tim.
Yeah, that Facebook head and shoulders pattern is there on Amazon as well on the long-term weekly charts. CTSH, Matt.
CTSH here. Cognizant showing a little bit of a bearish retracement, maybe a bearish flag pattern. This is an inverted hammer candle. No trigger here because you just don't have the support. You don't have the range to make a trade here. I would love a retracement coming back up into some decreasing moving averages, but I think there's probably going to be better short trades.
Yeah. TSM. Taiwan Semiconductor. We looked at a few semiconductor stocks. I'm guessing we're all moving.
TSM continuation breaking out here in the Taiwan Semiconductor Manufacturing ADA sponsorship company. Yes, there was some sarcasm there. But in terms of this, you are overextended to the top side. Yeah, it's what we say in the coaching meeting every time we have did you miss it? Okay. I don't know how many times that question has been asked on a breakout. Did you miss it? Are you late to the party? Are you chasing the dragon? However you want to put it, you're chasing the dragon at the top end of the range. Inverted camel, look for some fade action, look for a retracement, look for a bullish flag pattern.
Yeah. And guys, we got a bunch in there. We didn't get to every one of them today. I'm going to give one last one here, Disney, from Linda, who's in our Tackle Trading Football League. And Linda, love the company here, fading down, sitting on some major long-term support. Actually broke below a pivot, but you got old support zones down here. I'm interested in this streaming news in the fall, Matt. You know, I think Disney has a very important quarter for its future coming up right in front of it. They're going to be launching that new product. You've got a lot of stuff going on with the company. It's not been a great performer the last couple of months down at 130. Anything to add to Disney?
Watch the support level right here, Tim. I mean, you're right there at about 127 by 130 is where I'd put that support zone. If you do break that support zone, the gap probably fills.
Yeah. Hey, did y'all see the ad they had for the new stream service? It is just nothing but a pull your heartstrings, make you think it's Disney, your memory, and then they say everything that you loved in one place and only one place. It's like they're making you like right away. Like
Disney has some good marketers.
Why do you think we put the Mickey Mouse ears on and go watch the fireworks at Disneyland every year?
Who does that?
It's pulling your heartstrings, and it's all about the emotions of those moments.
When's the last time you were at Disneyland? You don't have the heartstrings pulled.
It's been 2 years.
You're pulling your children.
That's right.
Happiest place on earth until you go there with your kids, and then they're just monsters.
I got to get one more. GE, give me GE, Lewis. You reminded me.
I can't believe you didn't do it. GE getting smacked in the face here today, coming off a kind of a rounding top there, hitting into those moving averages, both the 50 and the 20. And GE, Tim just like literally, we got into the halftime report prep show today. Tim was a little bit late, and we're in a conversation, and all of a sudden Tim just says, "Yeah, but I'm having a real good day." And I'm like, "Why? What are you trading?" He's like, "No, I'm just GE's down." I'm like, all of a sudden, Tim has just found this stock that he just hates. He just can't stand it. And I don't blame him. It's a bad company.
Dude, the fundamentals dictate that this company should be a $5 stock. There's no doubt.
The fundamentals dictate that this company should have went bankrupt 10 years ago.
It absolutely could be bankrupt. Yeah. There's no question about that. Now, they've got a new CEO that everybody's getting excited about. They like his potential for leadership.
We hated Walmart up until 13, 14, and 15.
I'm with you.
I remember when JCPenney got a new CEO and everyone was excited about the turnaround there too.
Yeah, but that was like too late. I mean, that was like 15 years too late. And it is too late for GE as well, in my opinion.
Real quick, couple of pitches, then I'm going to bring Mark in and you can kind of set up whatever we got going on at Tackle Trading. Number one, if you are watching our channel, welcome for the first time, and make sure you like and share and subscribe to the channel. If you're watching our channel and you're not a pro member at Tackle Trading, we always give a trial offer away to let you come in and see what we do in our pro membership, where we have, well, Matt, how many hours of content do we put on for our pros every week? 15 or so? I mean, we have a live traders lounge every day. We've got nightly webinars, mastermind groups. We've got all kinds of things going on. We've got the scouting reports on the weekend. It's $97 a month, but you can get 15 days for free right in the link in the comment section below. So make sure that you do try that out.
Hey, Mark, Tim, just very quickly, we get testimonials through a third party called Trustpilot. Right. Mm-hmm. And we do that because we want to have transparency in testimonials, because most companies don't. And we got a testimonial yesterday. I want to read, okay, from Jared Stone. And thank you so much, Jared, for filling that out. But he says, tackle trading is not a quick fad. It is a community. It's not a place to sell you a quick book or yell at you on a YouTube ad until you buy and then never hear from them again. They built a community of resources and people to help every type of trader from beginner to expert. There is constant webinars and classes being produced and held daily, along with a handful of coaches who thoroughly enjoy helping others. I'll be a member of this community for life. That, in essence, is what tackle trading is. That's outside awesome. Of all the webinars, outside of all the coaches shows, outside of all the step system, the Tackle 25, bear market survival guide, and everything we do we are a community of like-minded traders who are all trying to navigate this world of finance together. Yeah. And that's what I love about what tackle trading represents.
I love it. I mean, that's an amazing testimonial, Jarrett. Thank you very much for being a part of our community and our team and getting that voice out there. If you love tackle trading, just put in hashtag Team Tackle in the chat. That's the one we use all the time. Halftime report is one of my favorite things we get to do every day, Matt, because we get to come and hang out with these guys and talk markets. Mark, what do we got going on tonight, tomorrow, throughout the week at Tackle Trading?
All right. Well, let's just focus once again. You want me to tell the whole week? I can't think that far ahead. I can think about tonight though. And we have earnings season coming up. Earnings season for traders is always a big deal. Special strategies are often invoked. And we're going to talk about the straddle tonight. Coach Noah and Tyler Craig are going to be there teaching the straddle. And then we're going to do strangle next week. And then the short straddle strangle the week after that. So we're going to have a whole big these very popular earnings type strategies heading into earnings season. We're going to do a 3-pack of shows heading into earnings season so you can prep up, think of ideas. A lot of people love these type of strategies. It was funny, as my best trade last year was this type of strategy, even though I don't even normally do them. So definitely something to have in your playbook, if nothing else.
What the hell is this?
dude, this happened just yesterday at O'Hare.
The best part is the guy at the end.
This thing gets all messed up and it's just going out of whack. It's going to hit the plane. Almost hits the plane, right?
That looks like Matt's fantasy team this weekend.
Hold on. Boom. Okay. Now, the first thing I thought about was, that is a perfect example of a stop loss.
That's
perfect
good.
example. of a stop loss.
That looks like the Dolphins swirling down the drain this year.
Don't you bring up negative stuff right now. We
Oh
just
my
praised your
God.
positivity, and all of a sudden, 2 daggers in a row. Okay. Also, guys, we did release the latest edition of the podcast, Train Justice Podcast, yesterday on the Poor Man's Covered Call. Noah did a great job coming in and helped describing what it is, kind of the rules, how to select time and strike. Also, Christian Sisson, if you have not read the latest edition of the newsletter, you are missing out there.
It's incredible.
It is a beautiful, beautiful written newsletter. And I'm quickly just falling in love with Christian's writing because he is.
I'm so jealous of his writing.
English
isn't even his first language, and he writes better than I do.
He writes better in his second.
He writes better than all
language.
of us collectively if we put our heads together for the next 2 weeks. He just has this creative mind, and it's so beautiful. And he just talks about the lessons he learned from his mother, from Rocky Balboa, from Michael Jordan, from sushi chefs. And he's talking about the lessons he learned about what not to do.
Yeah.
And I think that is it's so definitely go listen to the podcast, definitely go pick up the newsletter. And if you don't get the newsletter in a PDF in your email, you can always go sign up for the newsletter at tradingjustice.com as well.
I love it. Guys, wonderful show today. A lot of fun. Noah, you're going to be with me through the week. Cody, you're going to be
here
with
tomorrow.
me through the week. Matt, you're going to be here tomorrow as
I may
well.
be here tomorrow.
And then you're taking off this week.
Yeah, I'm teaching for Legacy I'm teaching for Legacy Education down in LA. And I'm excited to go down to LA.
What's the weather like in LA?
It's better than here.
It's been cold here in Utah.
Yeah, it's been chilly here in Utah.
Guys.
Although I do like the chill because I get to wear my hoodies.
Yeah.
And if you can guess the weather exactly on all 3 days, when Matt's in LA. So Thursday, Friday, Saturday.
Do you have it in you not to do a game of
Thursday, Friday, Saturday, you get a month free of tackle trading.
Okay, he has 2 instincts. Number 1 is to always play a game because he loves games. And number 2 is to invent the rules so that he can make up whether or not somebody wins or not.
Yes.
Because I don't know how you guess the weather.
Tim is so bitter.
Tim, you can't beat profession. Just accept the
Guess the weather. The 3 days Matt's in LA, Thursday, Friday, Saturday, month free, whether you're pro member.
Sunny.
No, what are you doing?
3 days Matt's in LA, Thursday, Friday, Saturday.
Absolutely not. That is not happening. You can't track it. You're not going to do it. That is not happening.
I am. Email me.
No, you're not. It's not happening.
I'll pay for it. I'll pay for it.
Okay.
I'll pay for it. Email me. Weather, 3 days at Matt's in LA, Thursday, Friday, Saturday. Got to get it in today, though. Got to get it in today. And you got to be precise. So go look at those weather forecasts like natural gas traders do.
All right. Send us out, Cody.
We're out.